Good morning, dears, and welcome to Super Coaching for UPSC by Textbook. And I am your economy mentor Pradeep. And today we meet here to discuss one of the very important topic of Indian economy, that is evergreening of loans. So first, let me tell you that why we have decided this session. The thing is that Bandhan Bank that on 12th Feb, there was news that in the forensic audit, the forensic audit, through the forensic audit, it has been found out that the Bandhan Bank has taken some steps for evergreening of loans. Okay, and that was the major news in a business line. That means that was the front page news of business line. That's why it is important to know that what is the meaning of evergreening of loan. That's why we started, that is related to current affair. That's why we are discussing this session. Very good morning, Shivani. Very good morning. Very good morning. And welcome to all. So the thing is, that's why it is very important to understand that what is the meaning of evergreening of loan. And that means, let me tell you that how we are going to proceed with this session. First of all, we will try to understand that what is the meaning of evergreen of loan. Then we will try to understand why the why bank do follow the evergreening of loan. Then we will discuss that what are the approaches being utilized by the banks for evergreening of loan. Then we will discuss that what are the implications of evergreening of loan. Then we will discuss that what can be the way forward, or we can say that what can be the steps to stop the evergreening of loan. Okay, that means it is as per the RBI guidelines, it should not be, and there is a strict PJ Nayak committee recommendation was there, and as per the PJ Nayak committee recommendation, the evergreening of loan should be avoided. Okay, there should not be, it should not be avoided, rather it should not be, there should not be any evergreening of loan. That's why we are discussing this session. So let's start our session. So first of all, as I talked about, first of all we will try to understand the meaning of evergreening of loan. That what is the meaning of evergreening? The meaning of evergreening of loan is nothing, the evergreening is nothing but a term in which banks revive. Be very clear that what is the evergreening of loan. Evergreening is a term in which what banks do, banks revive a loan that is on the verge of default, by granting further loan to the same borrower. That means in order to avoid NPA, the bank is going to give loan to the same borrower who has not paid their earlier liability. That means it may be in the form of interest, it may be in the form of principal. The borrower has not paid neither the principal amount nor the loan amount, interest amount on the loan which has been taken by the borrower in the past. And that's why that loans are going to be converted into NPA. And just to avoid that the loan should not convert into NPA, that means the bank is going to provide another loan to the same borrower in order to avoid the past loan cannot be converted into NPA. So that is known as evergreening of loan, and it is very, very, very harmful for the economy, because if it is going to be, the financial health of the bank is going to be deteriorated, and that means that in the banks it is the money of the public, and there is a risk to the money of the public. That means if there is going to be that bank is going to be bankrupt, who is going to pay the money of the public? So that's why that is the major concern of the RBI, that there should not be any activity of evergreening of loan. That's why it is very important. So first of all, we try to understand that what is the meaning of evergreening of loan. That is nothing but a term in which bank try to revive the loan. That is on the verge of default. And why they are, how they are reviving? By granting further loan to the same borrower. Okay, and this is nothing but a form of zombie lending. Be very clear, this term is very important, that is zombie lending. Okay, so that is nothing but a form of a zombie lending. What is the meaning of zombie lending? Under it, what bank, same thing, the bank provides more loans to the borrowers, to stop them from turning into used non-performing assets. Okay, so that their loan should not be converted into use non-performing asset. Okay, because as per RBI guidelines there should not be NPA. If NPA is going to be, RBI is going to punish the commercial banks. So that's why that commercial banks try to avoid the NPA, or try to, that means hide the NPA, because it is going to be punished by RBI. Okay, so that's why that zombie lending is nothing but that means providing more loans to the same borrower in order to avoid the NPA, so that with this loan the borrower can give, that means can pay the principal or the interest payment of past loan. That is nothing but meaning of evergreening. Now this is nothing but a temporary process. Evergreening is a temporary process for which covering the real status of the stressed loan, through which the banks try to cover the real status of stressed loan, although there is already NPA. Yeah, it is unhealthy. It is unhealthy for the bank as well, Alicia. It is unhealthy for the banks as well as for the economy. That's why as per the guidelines of RBI, it should not be. That's why we have discussed. We are discussing it because there was news in forensic audit of Bandhan Bank, that Bandhan Bank has taken the activity of evergreening of law, and that should be avoided. That's why we are discussing it. Okay, Janvi, very good morning, dear. Very good morning. Now we are going to proceed further, and we are going to discuss that how and why the banks follow the evergreening of loans. Okay, what are going to be the methods? What are going to be the methods of evergreening of loans? That means what they are going to do, they are going to, first of all, the account is turned into non-performing. Why? Because that account is turning into NPA. We are talking about why, although I have already discussed that why that banks do the evergreening of loan, because there is going to be NPA. If the past loan, what is the meaning of NPA? Let me explain first what is the meaning of NPA, then it will be more clear. The meaning of NPA is non-performing asset. Non-performing asset, or it is also known as bad loan. It is also known as bad loan. So non-performing asset, if up to 90 days, the borrower has not paid either the principal amount of loan or the interest amount of the loan, then that loan is going to be converted into NPA. Suppose SBI has given loan of 1000 rupees to A, and up to 19 days, the A has not paid neither the amount of principal, some amount of principal, because this has to be paid in EMI. So that means in EMI is going to have the contribution of some amount of principal and some amount of interest. So that means up to 90 days, the A has not paid neither the principal amount nor the interest. Then this loan of A by SBI, that is 1000, is going to be converted into NPA. If it is going to be converted into NPA, there is that means guidelines of RBI, that RBI is going to punish the commercial banks. RBI is going to punish the commercial banks. Be very clear. Okay, be very clear. That's why the commercial banks try to avoid the disclosure of their NPA, and they try to avoid the NPA by granting further loans to the same borrower, so the borrower can pay the principal amount or the interest of past loan, so that it is not going to be categorized as NPA, so that it can avoid their punishment by the RBI. Okay, so that is the basic requirement, or that is the basic philosophy of our commercial banks. So that means they try to turn into non-performing assets. Okay, they try to. Okay, so that higher provisioning, what is the meaning? Okay, there is something, let me explain it more clearly. There is something which is known as CAR. CAR is nothing but capital adequate ratio. Okay, that is nothing but risk-weighted assets, please be very clear. Risk, that is nothing but paid up capital. Car is nothing but capital adequacy ratio. This is nothing but capital adequacy ratio, and car determines the financial health of any financial institution. Car is instrumental for giving the indication about the financial health of the banks. Financial health of the banks is indicated by the car. Okay, car is nothing but capital adequacy ratio, and this is nothing but paid up capital. Car is being maintained in the form of paid up capital. This is nothing but ratio of paid up capital with risk weighted assets. Risk weighted assets. Risk weighted, WEIGHTAGE, assets. Be very clear what I want to say. That this car is nothing but, as I talked about, car is nothing but capital adequacy ratio. This is an indicator of the financial health of the banks. And car is nothing but ratio of paid up capital upon risk weighted assets. So that means if the NPA is going to increase, if NPA, non-performing asset, is going to increase, if the bank's NPA is going to increase, it is directly going to increase risk weighted assets. Then the car is going to be reduced. If the car is going to be reduced, RBI is going to punish the commercial banks. RBI is going to punish the commercial banks because they have to maintain the car. In order to be in the business activity, the banks has to maintain the car. If they are not going to maintain the car, RBI will punish them. And what is car? Car is nothing but paid up capital upon risk weighted assets. If their NPA is increasing, that means risk weighted, this is increasing and this is constant, then car is going to reduce. Because denominator is going to increase. If the denominator is going to increase, this is going to decrease. So that RBI is going to punish them. So just to avoid the punishment from the RBI, commercial bank is going to maintain the car. And how they are going to maintain? By reducing this risk-weighted assets. And how they are going to? They are doing it by evergreening of loan. That means they are providing the loans to the same borrower, so that the borrower can pay the principal amount of the that means interest payment, which has been taken by the borrower in the past, so that it can avoid the NPA. The bank can avoid their NPA so that they can maintain their car. In order to maintain their car, either they have to increase their paid up capital. Paid up capital is nothing but the investment by the promoters of the bank. So either they have to increase it in order to maintain this, or they have to decrease it. Generally, the banks do not increase the paid up capital, because it is directly going to be burden on the promoters of the banks. So they generally try to avoid this risk-weighted assets, and for that the banks do either the evergreening of loan, or they invest heavily on government security. They heavily invest on government security. That's why there is something which is known as SLR, statutory, and in that there is provision that the banks can invest in the government security, because government security is the least that means most secure, or there is least possibility that government can be bankrupt. If the government security is least risk, have the least risk, their risk-weighted assets is going to decrease. That's why the commercial banks heavily invest in the government security in order to avoid their risk-weighted asset, in order to decrease their risk-weighted asset, in order to maintain their car. That is known as safe banking. That is known as safe banking. If commercial banks are going to heavily invest in the government security to reduce their risk-weighted assets in order to maintain car, that is known as safe banking. If other thing, in order to reduce the risk-weighted asset and to maintain car, there can be evergreening of loans. And what is evergreening of loan? Evergreening of loan means they are going to give the loan to the same borrower who has taken the loan in the past and who is on the verge of the default, because he or she has not paid neither the principal amount nor the interest for last 19 days. And that's why it is going to be converted into NPA. If it is going to be converted into NPA, the risk-weighted assets is going to increase, and the RE is going to reduce, and that the bank is going to be subjected to the punishment of RBI. So that means they try to reduce by giving the loan to the same borrower. That is known as evergreening of loan. So this is the philosophy. Now, so that this is very clear that they avoid to classify NPA, and for just to avoid the classification of NPA, in order to avoid the punishment from the RBI, they are going to, and that's why they are doing the evergreening. Okay, that we already discussed. The banks offer the fresh loans to the borrower on the verge of default to ensure that they pay, they repay the old loan. Bank delay the recognition of losses through the evergreening of loans process, and banks also avoid provisioning. Okay, provisioning means as I talked about that they have to reduce their risk-weighted assets. That means they have to reduce their risk-weighted assets in mountain to car. They will be in business activity only if they are able to maintain the car. If they are not able to, the RBI is going to punish them, and even RBI can cancel their license. Okay, provisioning, that means either that means just to have more and more funds for the investment. Okay, if they are going to make the safe banking, if they are going to do that means how they can maintain the car. Either they can maintain the car by evergreening of loan, other thing is by investing in government security. If they are investing in government security, because government security is least that most secure, that is most secure. Okay, government security is most secure. So what is going to be, so that's why that if the RBI, the commercial banks is going to invest in government security, their profit margin is going to decrease, because if something is that means has the least uncertainty or most secure, that returns are going to be low. More risk, more returns, less risk, less return. Okay, so that government security is least risky, that's why low returns, whereas the other security, private sector security is highly risky, because private sector may be on the, that means they may become the bankrupt. So there is high risk, so high returns. So if they are, in order to maintain car, either they are doing evergreening or they are going to invest in government security. If they are going to invest in government security, their returns are going to be low, their profit margin is going to be reduced. That's why they try to do the evergreening. Okay, evergreening. Okay, so that means that although it should be avoided, but that is nothing but provisioning. That most of the funds they can invest in private security rather than government security in order to increase their profit margin. That is nothing but provisioning. Okay, so this is the meaning. Now we are going to proceed further, and we are going to discuss the next, what are the approaches, how the RBI take the approaches, how not RBI, how commercial banks do the evergreening of loans, how the commercial banks do the evergreening of loans. So what is going to be, one thing is going to be selling and buying back the loans. That instrument, whatever, whenever, I always talked about that whenever the transfer of funds is going to take place, there is two things. One is borrower, other is creditor. Suppose A is the borrower, B is the creditor. Okay, so whenever the transfer of funds are going to take place, means since A is the borrower, so funds will transfer from B to A. Okay, and the transfer of funds always takes place on the behalf of security. Transfer of funds always takes place on the behalf of security. So that means when they have given the funds, that means the Bandhan Bank or any commercial banks has given the funds. So that means that may be Bandhan Bank, that may be A. So that means security. They must have to transfer the security. So evergreening of loan means they are going to return back that security and they are going to give them new fresh loan. Okay, so that is nothing but they are going to in their account they are going to maintain that the past loans has been repaid. So that is not going to be converted as NPA. So buying and selling of the back loans, okay, that is going to be the part of evergreening. Other is persuading the good borrower. Okay, persuading the good borrower to structure the bad loan, to structure the bad loan and to integrate the good loan and bad loan, and just to reduce the car or just to reduce, that means money, doctoring the accounts by integrating bad loans with the good loans. Okay, that is nothing but persuading good borrowers to enter into structured deal with a stressed borrower to hide their default. Okay, other method can be other using the internal office accounts, that means doctoring the accounts. Other is reviewing and disbursing new loans, we already talked about. So these are the approaches which is being utilized by the commercial banks for disbursing the loans, and that is to the same borrower who has not paid neither the principal amount nor the interest for 19 days. Okay, that is nothing but evergreening of loans. Okay, so that is, now we are going to discuss that what is going to be the when we talk about what is going to be the implication or consequences. Now we are going to discuss that what are going to be the consequences of these bad loans. So what are going to be the consequences? Please let me explain it. So one is going to be misinterpretation of loans. Very first is misinterpretation of loan quality. That means if if banks are doing the evergreening of loans, if banks are doing evergreening of loan, that financial health of the bank is going to deteriorate or not? Financial health of the bank is deteriorating, but they are hiding that their financial health is not as good as seems to be, because they have given the loan to same borrower, and that's why they avoided NPA. So that means financial health is going to be deteriorated, but they have hidden these facts from the public. And whose money is there in the commercial banks? It is the money of the public only. If the bank is going to be bankrupt, then the public is going to lose their money. Who is going to pay the public? That misinterpretation of the quality of loan. They are that means underestimating their NPA. They are underestimating their NPA. Although there is NPA, and that is the financial health is not good, but still they are hiding it. Okay, so that is government audit failure. Okay, that means governance and audit failure. Okay, that means they are, as I talked about in the methods or the approaches, they are doctoring the accounts. And when they are able to do the doctoring, that audit of the banks, the external audit is not good enough. Not only that their governance is not good enough. Okay, the highest chief executive of the bank is not that means not taking care of the things. That governance is not good. Okay, other is round tripping. Please be very clear. Let me explain it. Round tripping. What is the meaning of round tripping? Round tripping means Radhe Radhe. Dhanu Tiwari, welcome dear, welcome, and try to understand the things. No issue. Please try to understand and be regular. Be regular, dear. So let me explain round tripping. So what is the meaning? As I always talked about, that transfer of funds always takes place on the behalf of security. That means there is A and B, two individuals are, that means the transfer of funds is going to take place between or among two individuals or more than two individuals. or two institutions or more than two institutions. So that means transfer of funds takes place only on the behalf of the security. So if the funds are going to be transferred from B to A, it is going to, the security is going to transfer from A to B. If the funds are going to transfer from B to A, the security is going to transfer from A to B. Round tripping means, suppose Bandhan Bank is there, they are going to invest in mutual fund. They are going to invest in mutual fund. Okay, and whatever that means, they have given the loan. Suppose, let me more clear it. Let me clear it. That suppose Bandhan Bank has given the loan to A, okay, and that has become NPA. That has become, that is on the verge of becoming NPA. That has not become NPA because it will be disclosed. To no issue, dear. The no issue. Please be focused. Now, please try to understand. So the thing is, NPA we are talking about, that the Bandhan Bank has given, or any commercial bank has given the loan to A, that may be individual or organization, whatever it may be, and that means that the loan is on the verge of converting into NPA. That it is has to be declared by the banks only. But bank has not declared NPA, and what bank has done? Bank has given further loan to the A. Okay, that is an evergreening. We already discussed. Then how this is going to be? How it is round tripping? That how the bank is going to? Bank is not going to give loan from their capital, but how they are going to do? They are going to invest somewhere. Okay, that means when they are going to take the loans from someone public and they are going to lend, so they are going to lend to different borrowers. That may be the individual, that may be mutual fund, whatever it may be. So what they, that is known as alternative investment. Okay, portfolio, alternative investment portfolio. So what is going to be? Suppose they have invested in mutual fund, they have invested in mutual fund, and whatever returns are coming from mutual fund, so that returns, suppose that 1000 rupees are returning from the mutual fund, they are getting the 1000 rupees through the investment of mutual fund. So that 1000 rupees is further going to be transferred to A. Okay, in the form of, that will be known as evergreening. But this is nothing but round tripping. That means whatever alternative investment has been done by the commercial banks, whatever returns are going to be generated through that alternative investment, that returns are going to be dispersed further to the subprime borrower, who has not paid loans to their who have not paid their past loan for 90 days, neither the principal amount. This is known as round tripping. This is known as round tripping. That means they are investing in mutual funds, and whatever returns are getting from mutual fund, they are going to transfer those returns, they are going to disperse those returns to those borrowers who have not paid their principal amount or the interest for 90 days. That is known as round tripping. That is known as round tripping. The practice of mutual fund investing in the commercial papers, that is, as I talked about, always with the security. So mutual fund, that security is commercial paper, and returning funds to the banks. Okay, and this will lead to increase in correlation between the banks and mutual funds, and performance escalating market concentration risk. That means it is going to increase market risk. If banks face liquidity issue, mutual funds might be unable to redeem it. Okay, commercial paper liquidity crisis, evergreening through the such round tripping hides the true credit risk. Hide the true credit risk, as the commercial paper might be underpriced compared to the actual borrowing, and there can be the regulatory challenges as well. There can also be the regulatory challenges when there is going to be the evergreening of loan. When there is going to be evergreening of loan, that means there is going to be challenges for the regulation. There is going to be challenges for the regulation, because they have doctored their accounts now. So how anyone can find out? these faults. Okay, there is high that means expertise is needed to find out these things. Okay, so there is going to be the challenges for RBI, and there is going to be challenges for the audit team as well, external audit team as well. That's why this is going to create the issues. Now we are going to proceed further, and we are going to discuss the how evergreening of loan can be stopped, how the evergreening of loan can be stopped. Now let me explain that how it can be stopped. Please try to understand. One is enhanced risk assessment. Okay, that means the loan should not be disbursed to the subprime borrower. You people may be aware about the that means subprime crisis, that Lehman Brothers collapse, that there was financial crisis in 2000 and there was financial crisis in 2008 because of the Lehman Brothers, collapse of Lehman Brothers. Okay, that was the biggest bank of USA, and that became the bankrupt, and they declared themselves as bankrupt. The moment they declared themselves as bankrupt, that was instrumental for the financial crisis in the entire world, because we are globalized economy. The economies are integrated, and that was the biggest bank of the USA. And the moment they declare themselves as that means bankrupt, that moment the financial crisis started in the entire world, not in the USA. It started with the USA, but it spread in the entire world. Okay, but in case of India, it was not that much high, because that means in case of India, that most of the demand, most of the things are internally demand. Okay, that's why, and ICIC was the most affected, and there was many times there was that means notifications by the ICICI that we are not on the verge of the default, or we are not going to be bankrupt, just to build the confidence of investors, just to have the confidence of the public, general public. So the thing is that and why? Let me explain that why there was subprime crisis and why there was financial crisis that was known as subprime crisis in 2008. And it was because of that. That means the Lehman Brothers gave the loans to subprime borrowers. That means they do not have the the credit to get the loans, but without taking into consideration their credit worthiness, the Lehman Brothers gave the loans to each and everyone. Okay, and because of that, they were not able to repay the loans, and because of that, the NPA of the Lehman Brothers increased, and that became on the verge of that they had to declare, after some period of time, they have to declare themselves as the bankrupt. And why it has happened? Because they have not they calculated the risk. Risk assessment was not adequate. That's why that has happened. So that's why whenever, that means when the bank is going to give the loans, there should be sufficient or adequate risk assessment. There is need to have sufficient or adequate risk assessment. That means there is need to have the instrument to enhance the risk assessment of the borrowers beforehand. So there is need to have the risk assessment. Okay, so financial institutions should adopt the robust risk assessment practice to evaluate the credit worthiness of the borrowers accurately. Very first step. Okay, when you are going to provide the loans to in the initial phase, there should be that means adequate measures for risk assessment. Then there is need to have the transparent reporting and disclosure. Transparent reporting and disclosure. Okay, that means it has to be declared by NPA, is going to be declared by the banks, but they are avoiding this just to avoid the punishment by the RBI, just to maintain their cap. So that should also be avoided, because ultimately that is going to compromise the health of the banks, and not only health of the banks, health of the entire economy. So there is need to have the transparency. Okay, And there is other thing is there is need to maintain the assets liability management. There is need to have the assets liability management. Okay, the banks have to maintain their assets and liability. Okay, they have to take the measures to manage their assets with the liability adequately. So that is should also be there. And other thing, there is recommendation of PJNI committee. Okay, that as I talked about that this was the committee which talks about that the evergreening of plans should not be there. That they should be highly punished. The banks should be highly punished who is being involved in the evergreening of loans. So this is the committee, PJNI committee. So according to the committee, the review governance of Board of Banks of India was significantly evergreening of loan is detected by RBI, and penalty should be levied. Okay, there should be penalty on those banks who is involved in the evergreening of loans through cancellation they were taking. That means even the RBI can cancel their license. Cancellation of unvested stocks, options, clawbacking of monetary bonuses. That means the highest authority, that bonuses should be stopped of the highest authority of the banks. Okay, and concerned officer and full-time directors and chairman of the audit committee be asked to step down. Whosoever has done the internal audit, the chairman of that audit committee should be asked immediately to step down, because that individual was not able to identify the practice of evergreening, and that is not good for the economy, health of the economy, for the health of the bank as such, and for the health of the bank in particular, and health of the economy in general. So that's why these are the measures through which the evergreening of loan can be stopped. And this is all about our today's session. If there is any doubt in regard to this session, let me know. Let me know if there is any doubt regarding this session. And if you like and you like this session, please like, subscribe this channel and share as well. So this is my Telegram ID. To get the PDF of this session, just join my Telegram ID. This is my Telegram ID. Just join it to get the PDF of this, or you can search Pradeep Sir Textbook. You can search my Telegram ID with the Pradeep Sir Textbook. With Pradeep Sir Textbook. If you will search Pradeep Sir Textbook, you will get this, and you can join this Telegram ID to get the PDF of this session. And not only PDF, you will get lot many things that I am regularly posting there, that business news which is important from UPSC point of view. So you will get that what news item you should have to read in order to have the concept clarity with regard to economy. Because this I am discussing this session because of the business line news only. Okay, there was business line news, and this was the front page news, that in the forensic audit there was activity of the evergreening of loan by Bandhan Bank on 12th Feb. This was the news. That's why I thought to discuss this, so that it should be. So you will not only get the PDF, but you will also get lot many other things as well. You will get each, and that means you will get the practice questions there. You will get the practice question for prelims as well as mains. You will get the PDF, you will get, and you can resolve any issue related to UPSC civil services exam preparation, because I have 12 years first hand experience for this exam. I faced civil interview 3 times, so I have the first hand experience, first initially as a student and after that as a teacher. So I have the first hand experience. That's why I can resolve any issue. So this is very important. So just like, subscribe and share this session if you like it. Thank you very much, dear. Thanks a lot. We stop here. Thank you very much, dear. Thanks a lot.